Hello, fellow investors. My name is Herm, and I'm the owner and operator of www.coveredcallwins.com, which is my educational investment internet business. This past year, we reached our 14th year, and on March 1st, 2012, it's the start of our 15th year. So stay in touch, as we always have some surprises to share with you. I have been investing for over 25 years. Would you believe that was even before the internet? I have earned 2 college degrees and I have a wealth of personal experiences from working since I was 14 years old. I guess I was always an entrepreneur at heart. So I have a wealth of knowledge to share with you, and I'm no stranger to technology, online investing, and how to take advantage of the many tools available today for successful online investing. You're probably asking yourself, how in the world did I manage to make this fantastic 111% rate of return in 2011 when the stock market was so darn volatile and perhaps scared the heck out of you? Sadly, perhaps you might have been one of those that took a chance investing in the past and lost some money back in 2011 or even before that. That would not surprise me at all. Perhaps you knew someone that lost money back in 2008 or recently during the housing bubble burst, which has driven the U.S. economy into a pretty severe recession for millions of people. I'm sorry if that rings true for you or anyone you know. I have experienced that kind of loss myself a long time ago when I first started to invest and I did not know what I was doing at all. They say that the stock market is a zero-sum game because for every seller there must be a buyer, or the reverse. For every buyer, there must be a seller. That means someone is always making a profit regardless if the market is going up or down or sideways. What have I learned over the past 2 decades? Thank goodness, there is always a strategy that can be employed that dramatically reduces your investment risk and enhances your rate of returns. Keep watching this video, and I'm going to explain to you what I and my Win subscribers did in 2011 to make our profits. For starters, how would you know when the entire market is about to move into a true, full-blown bull or bear market? Surely there must be some way to help you to know when the current trend is more than just a temporary whipsaw or a dip. Is it a normal correction? Well, there are ways to know that kind of information. For example, we use the 39-week moving average indicators with the Dow Jones Industrial Average, the Transportation and Utilities Indexes to help determine the major bull or bear market. In other words, the major trends. This is a set of indicators that I have used for more than 25 years with great success to pinpoint all the major bear and bull markets and the conditions that are leading into major correction. You can use any free chart plotting software program to set the weekly price plots and then add a simple moving average set to the 39-week for the Dow Industrial Average, Transportation, and the Utilities Index. How do you know from week to week what the market trend will be so that you don't get caught on the wrong side of the trade? How can you prepare and be better able to exploit those week-to-week market swings and lower your risk-reward factor? In other words, decrease your risk and increase your reward. There are 2 free tools anyone can use to help you be on the right side of the price trend for the majority of the time. Yes, from time to time, there are major shocks to the economy like the dot-com bust, the 9/11, or the housing bubble burst that seems to come out of nowhere and force a major trend reversal. The 2 techniques that I've used that have worked for me are reviewing the monthly economic calendar on Yahoo or Bloomberg or any financial news website and use a good stock charting software program. For example, we use the CoTracker software program to monitor the day-to-day and week-to-week stock or ETF price trends in conjunction with the economic calendar for the weekly schedule. So we can see the big picture, the weekly price pivot trends, and know which day there may be a market reaction because of the economic news reports that are being released. Like for today, this is the first Friday of the month, and there's the non-farm payroll report, which gives us a strong indicator of what possible trend will be for the month. Jobs are important after all. It works like bread and butter. Now, what do I like to trade and why? We like writing leap calls or put calendar short-term spreads for quick income from the premiums we collect. We call it our Q's delta neutral strategies. We also like to basically swing trade major ETFs like the Spiders and the Diamonds, or swing trade close-end funds right before the ex-dividend dates for both dividend stripping and price appreciation. In other words, we capture the dividends, we make some money there, 8-9% annual return. Some of these even pay dividends monthly. We call our busy or lazy investor plan, or blip, the technique that I just described. These activities are market timed by using the economic calendar and the CodeTracker charting software, which remove as much of the risk and increase the reward. That's it in this particular video. Sign up for our free updates in which we'll review our target 2012 Q's Delta Neutral Leaps strike prices to get started in another profitable investment year. We look forward to seeing you on the other side. I'm wishing all of you the best of goodbyes.